What's going on, guys? Welcome back to the channel. Welcome back to another video. We have a lot to talk about today. First off, I want to talk to you guys about this nationwide ban that will be starting in less than 24 hours right here in the United States. And this is going to affect all 50 states, as a matter of fact. I'm going to go into all the details on that particular ban in just a minute. Social Security recipients, SSI, SSDI, people receiving or expecting to receive Social Security benefits from the Social Security Administration, the SSA. Basically, there's a 50% reduction to be expected. And yeah, I'm going to share all the details on this Social Security cut because I think that this is definitely going to be affecting potentially millions of people, and everyone needs to know about this. I'm going to share those details with you on that Social Security cut in just a minute. But yeah, so I'm pretty sure you guys have heard about LeBron James' son, Bronny James, essentially collapsing due to his heart having stopped just a couple days ago. And we've been seeing more and more people literally just collapsing, young people. And it's wild that this is happening. And we've been talking about this for nearly a year on this channel. And it's getting more and more notoriety. And, you know, it hardly gets any bigger than, you know, Bronny James. And he clearly has access to top-notch healthcare. So for all of these people in these different high-profile, even high schools, colleges, these different young sports players, people in Hollywood collapsing, it certainly brings some serious concerns. The same concerns that I brought up several months ago, nearly probably even over a year now. And I want to share something with you.
News here, TMZ reporting that LeBron James's son, Bronny, has suffered a cardiac arrest during a basketball workout.
Grammy-winning singer Tori Kelly rushed to the hospital after collapsing while out with friends.
From PSG, he's not gone on the tour of Japan. What have you missed? What have you seen? Shaq!
You see, guys, this is not some small issue. When your heart stops and you're like 20 years old, like that's a big deal. And this is not an isolated problem. I mean, we've seen numerous issues like this, not just Bronny James. We've seen it across multiple different sports, tennis, athletes, you name it. And I feel like, you know, this is being just kind of like swept under the rug. I was reading an article on CNN and, you know, they're pretty much just kind of like making it seem like, oh, well, he's been released from the hospital, so everything's fine. What are you worried about? And I'm like, what are you worried about? Like, we're seeing more and more of this happen. And it seems like it's, you know, there's a particular common theme that I do see is that there's a particular medication that people are taking or have taken, and this is starting to surface a pattern. And, you know, if you even, and depending upon who you talk to, it's kind of like, okay, well, if you even consider the notion that there may be some link between these people's hearts, young people's hearts suddenly stopping, or any type of cardiovascular cardiac attack or cardiac malfunction in connection to a particular, you know, medication, then it's like, you know, you're shunned. Let me know what you guys think about that. You know, are you seeing that? Am I blowing this out of proportion? You just let me know what you guys think. So basically from CNN, it says Bronny James, the 18-year-old son of NBA legend LeBron James, had gone into cardiac arrest during a basketball practice. The incoming freshman of the University of South California's basketball team was hospitalized on Monday. He has since then been released from Cedars-Sinai Medical, the Los Angeles hospital said, as of Thursday. Now, Bronny James was initially put in the ICU, you know, understandably so, but actually was released like just hours after. And his doctor goes on to say, quote, although his workup will be ongoing, we're hopeful for his continued progress and are encouraged by his response, resilience, and his family and community support. Doctor went on to say that he complimented the swift and immediate response of the USC Athletics medical staff. He goes on to say he arrived at Cedars-Sinai Medical Center fully conscious, neurologically intact, and stable. CNN obtained the 911 call after a public records request, and the Los Angeles Fire Department redacted a significant portion of the call. Now, if the Los Angeles Fire Department redacted a significant portion of the call, what are they trying to cover up here, guys? Like, what is going on? Like, I mean, again, I'm not trying to create any kind of like new theories or anything like that, but you got to wonder. I'm just saying, you got to wonder. So I'm hopeful that we'll get more of this. Hopefully we'll get the entirety of this particular 911 call, and then we can really look over this. But this is quite serious, guys. It's very serious. We also heard from Elon Musk suggesting that this particular medicine caused Bronny James cardiac arrest. All right, so Elon Musk suggests that this particular medicine may have caused Bronny James cardiac arrest. Now, obviously, Elon Musk is not a doctor. And it goes on to say here that Elon Musk floated the possibility that this particular medicine may have played a role in the USC star freshman Bronny James suffering a cardiac arrest during a basketball workout in Los Angeles on Monday. James, the highly touted 18-year-old son, lost consciousness before being revived on Monday. I mean, just can you imagine your child, your son, your daughter just straight up collapsing in the middle of anything, whether it's a sporting event or a birthday party? That's got to be an unbelievably traumatic experience. And as a result of myocarditis, which is a rare inflammatory condition that affects the heart, which has been reported in cases involving adolescents and young males who were administered this particular medication. Again, guys, I just want to share this information with you because it is relevant. It is very, very alarming and concerning. And most of us have kids. Some of us have grandkids. I said some of us. Some of you have grandkids, just cousins, relatives, friends. And it's just something to be concerned about. And anyway, so I mentioned that there was some big changes coming on with Social Security. And Social Security's next cost of living raise is forecast around 3%. Now, this is about a 50% or more. This is actually probably closer to 60% cut in the Social Security cost of living compared to the previous Social Security COLA increase that was received. So analysts are actually saying that the 2024 adjustment, which helps older Americans keep up with inflation, won't be nearly as high as the 2023 COLA increase. But the 2024 COLA increase will still be significant. More than 74 million Americans can expect a healthy inflation adjustment to their Social Security benefits next year, not as large as this year's historic 8.7% raise. Now, this recent slowdown in inflation points to a 2024 Social Security cost of living or COLA adjustment of around 3%. And this is a forecast. This is not set in stone yet, but this is based on the numbers that the Senior Citizens League has come up with, and these are largely in tandem with the CPI inflation numbers. And so, with CPI inflation likely to be around 3% by the time they actually make the official COLA adjustment, it's probably going to be around that 3% mark, which is a very significant drop compared to last year or compared to this year, technically. But, it would still be higher than the average 2.6% adjustment over the last 2 decades. But this is a real situation for seniors, for, people on Social Security, likely affecting SSI, SSDI, and many people who are looking to retire. A lot of people who, make contributions to their 401k investment accounts, their IRAs, they have a tendency to factor in, okay, if I'm going to be retiring in X number of years, you kind of like extrapolate how much you expect to receive in Social Security benefits. So that way you don't necessarily have to fund so much of your 401k. So if you knew you weren't going to have Social Security, you might have to contribute 15% of your paycheck to have enough 401k and IRA contributions to be able to retire by the age of, say, 65. But many people will say, okay, well, if I know I'm going to have Social Security benefits paying $1,000 a month, $1,500 a month, $2,000 per month, then you may only need to contribute, say, 8% of your paycheck to your IRA or to your 401ks in order to be able to afford to retire by the age of 65. And so this is why, even if you're not receiving Social Security yet, it is important to understand how they're making these COLA adjustments. So definitely affecting a lot of people. Now, if you are looking to become a millionaire, and this is actually, it's funny. I was actually reading an article, and it was saying how many more millionaires and billionaires have been made since 2020. And the number of new millionaires is actually unreal. In fact, let me tell you exactly how many millionaires there are in the United States. And so as of today, according to Zippia, there are about 22 million millionaires in the United States. In the United States, 8.8% of the United States adults are millionaires. Does that sound right to you guys? 33% of U.S. millionaires are women. So what this means is that for every 100 adults in the United States that you pass, almost 9 out of the 100 adults that you passed on the street are millionaires. Isn't that wild to know? Like, I had no idea that we had that many millionaires here in the United States. And so, you might be saying to yourself, okay, well, what stocks, what types of investments might have massive upside potential, right? And who's not wondering that, right? And ultimately, in recent weeks, there have been, many different stocks that have been making some incredible gains on the stock market. Well, it's Dow Jones, NASDAQ, S&P 500, and in particular, Monster Beverage, ticker symbol MNST, it actually turned $10,000 into $21 million over a 30-year period. And that's just with one stock. That's the Monster Beverage stock on the NASDAQ, ticker symbol MNST. And in order to generate the highest return of any S&P stock, in order to generate the highest return on any S&P stock over the past 30 years, you would need to think about obtaining these returns would involve significant risk. And generally speaking, you would probably have to undergo some significant risk in order to turn $10,000 into $21 million over a 30-year period. I mean, that's just insane. But pretty much for any Monster shareholder who's held for the past 3 decades, that really hasn't even been the case. In 1993, Monster went by the corporate name of Hansen Natural Corp. I don't know if you guys remember that, or if you guys drink Monster drinks, those tall cans of energy drinks you normally find in the gas stations and whatnot. So it sold juice under the Hansen Natural Soda brand, and it had annual sales of $23.7 million and $650,000 in net income. So these are pretty good numbers, right? Now, it wasn't reporting blowout profit margins, but it also wasn't losing millions of dollars per year like a lot of the biotech stocks that were allegedly making millionaires, but a lot of people were losing money investing in those types of companies. So, the company's big break came 10 years later in 2002 when it started creating this Monster Energy. So remember, it started off as Hansen, and then it evolved into Monster Energy. And over the next couple of decades, sales ended up jumping from $50 million to $1.7 billion, and pretty much the rest is history. So, sometimes it's kind of like the bamboo tree where you can plant seeds into the ground and you water this thing for, years and years and years. And then all of a sudden, like 6, 7, 8 years into watering this thing, you're not seeing anything. And then all of a sudden, out of nowhere, the tree grows like, 40 feet. So, some stocks do that. Some investments are like that. Some have quick rates of return. Others are delayed rates of return. And sometimes you don't make any money at all. But that's the benefit of diversifying your investment portfolio. I like to have my, like a 401k, especially if there's a company match. I like to have a investment retirement account, individual retirement account that I can control. And by having these two different accounts, I benefit from tax advantaged. Basically, these types of investment accounts, they're tax advantaged investment accounts. So in general, you're going to be paying less taxes, or at least deferred taxes. But by deferring them, in many cases, you can actually end up paying significantly less taxes. I'm not a tax advisor, but I'm just sharing that with you guys. But yeah, so that's a pretty big deal. Now, there is a nationwide ban that is coming in less than 24 hours. And I want to talk to you guys about this. So this U.S. ban on incandescent light bulbs is actually going to be starting next week. And so the Biden administration, they're going to be implementing a ban on these incandescent light bulbs starting next week in favor of energy efficient bulbs, following a years-long bipartisan effort to ultimately phase out the bulbs after earlier regulations and standards were blocked by former President Donald Trump. Now, I will be honest with you guys. I've actually been making a concerted effort to go around my house and swap out all of my old incandescent bulbs for LED bulbs myself. So I've kind of been like ahead of this ban already. I don't think we have any more bulbs in this house that are incandescent. And, the LED bulbs are a lot more expensive than the incandescent bulbs, but the energy utilization that each bulb needs to provide light is drastically lower, and they last a lot longer. So, so I think it's a good thing. I wish they wouldn't ban them, and make it so people who can't afford these more expensive LED bulbs, they might kind of put them in a rough spot. But it is what it is. And, it's outside of our control, really. The Department of Energy approved new rules for light bulbs last year that will take effect on August 1st, including a new minimum standard for light bulbs at 45 lumens or brightness per watt, an increase over the average 12 to 18 lumens per watt for incandescent bulbs. And so, this nationwide ban is coming in less than 24 hours now. Retailers will be prohibited from selling any bulbs, including incandescent bulbs, that don't match this new standard, including households using any existing bulb that does not meet the standard will not be required to stop using them. Well, obviously, our government's kind of wild, but I'm pretty sure the government wouldn't be knocking on everyone's door, looking at your light fixtures, making sure that everyone's not using these incandescent bulbs anymore. So if you already have them, you're good. And if you don't already have them, if you find a store that's selling them, you might want to go ahead and buy up everything that they have, because you won't be able to buy them in the future. Go ahead and stock up on those if that is important to you. The decision was meant to conserve energy and help consumers save on their energy bills. As energy efficient bulbs like LEDs use at least 75% less energy and last up to 25 times longer than the incandescent bulbs, according to the department. So it's kind of like, okay, this is like an investment in society, and it's almost forcing society to invest in these types of products as well, because they are much more expensive up front, but they do use 75% less energy. And if they use 75% less energy and they're lasting 25 times longer than an incandescent bulb, then it's actually cheaper over the lifetime ownership of this bulb. An effort to phase out less efficient bulbs was initiated by former President George W. Bush, whose Energy Independence and Security Act of 2007 called for household light bulbs to have about 25% greater efficiency. Though it did not outright ban incandescent bulbs, this new push is effectively doing just that. So, yeah, just want you guys to be aware of this nationwide ban that's coming out. An estimated 30% of U.S. households and used incandescent or halogen incandescent light bulbs in 2020, according to the Department of Energy. So 30%, that's like one in every roughly 3 people you pass on the road or in stores are using incandescent bulbs. So yeah, needless to say, it's going to affect a lot of people. But going back to these investments and these different stocks that could, be millionaire makers, as a long-term investment play. So Monster Energy was one of them, right? Now, let's look at some additional ones. Now, we're going to talk about 3 different stocks here. So all 3 are going to have a market capitalization of less than $2 billion. It's going to have annual revenue of less than $2 billion and are profitable. So the first one we're going to talk about is Arhaus. And this is on the NASDAQ. It's ticker symbol ARHS. And this is an Ohio-based lifestyle brand. And it's a retailer of premium home furnishings. Now, I'll be honest with you. I've never shopped at Arhaus. I actually looked through their catalog and I was blown away by some of the prices on these types of home furnishings. They're not designed for the economically. I'll just say that, you should check out Arhaus. I'll leave it at that. So certainly if you're well-to-do, you're probably looking there. But honestly, I don't even remember how I came across this company, but they were founded in like 1986. But ultimately, they're really a premium home furnishing company. Like if you're thinking, I would say think Haverty's, think Ethan Allen, think but Bassett Furniture and Hire. Like these people are like really, really premium home furnishings and decorations and whatnot. Anyway, so the company took 35 years to become a public company. Maybe it doesn't appear to be so fast growing, but nobody thought that Monster was necessarily going to become a multi-billion-dollar company either and make so many millionaires. But perhaps Arhaus could do it. So Arhaus, they went public back in 2021 at just $13 a share, and their shares are currently trading at about 13% below their IPO price. And this really isn't unusual for any kind of IPO stocks. Usually IPOs and IPO stocks tend to trade below their original offering price within 18 months of going public, after all the hype kind of wears down and whatnot. We saw this with Roku. We saw this with Snapchat. We saw it with a number of other different stocks, but not much has actually changed in the decade since then. Now, the company reported Q1 2023 results in May, and the revenues grew 24% year over year to $305 million with same store growth of 21%. Now, I was in Destin, Florida not too long ago, and I was actually seeing, and I actually visited or kind of drove by an Arhaus on, I think it was like US 98, Highway US 98. I don't know if you guys are familiar with Destin, Florida like that. But anyway, that parking lot was packed. That's all I can say. That parking lot was packed, and apparently people got the money to, to shop in there, and that's great. And I think we're seeing that in the stock performance here. So in terms of profits, Arhaus had an adjusted net income of $34 million, 113% higher than in Q1 in 2022. And for all of 2023, it expects revenues to be at least $1.2 billion. And the adjusted net income of $102 million would be the midpoint of the guidance. Now, Is our house a much better buy compared to like Wayfair, for example? It could be. It could be. So, but yeah, so it's got 44 patents on various products, and that creates like a really nice moat for the company. Like if you got that much patents, it makes it hard for competitors to enter your space and compete with you. So that could be a very good opportunity. It could be. Always do your own homework. This is not stock advice. It's not investment advice. Fiber is the key to the internet getting into the computers of Americans everywhere. Now, according to a 2022 article from CNBC, only 43% of U.S. households have access to fiber internet connection. Thankfully, we are one of them. We got fiber internet, and it's lightning fast. It's unbelievable how fast it is. But this actually leaves plenty of opportunity and growth for Clearfield. So let's talk about that, right? So Clearfield, they're on the NASDAQ, ticker symbol CLFD. They supply many of the guts that are required for telecom, for cable, for broadband providers to be able to provide fiber into the homes and businesses across America. So as you can imagine, if only 43% of households have access to a fiber internet connection, that means that that means that almost 60% of the United States could very well be a potential customer of Clearfield, because they provide the materials needed for fiber. Now, out of this growth, 13% of this growth was organic. And while the remainder was from its $23 million acquisition of Nestor Cables, a Finnish provider of fiber optic cable solutions, it finished the quarter with an order backlog of $107 million in orders. And this backlog was actually down year over year due to the company filling orders more quickly and returning to pre-pandemic order volume. So even though it looks like it slowed down, it looks like it's still very, very strong. And so on the bottom line, it ultimately earned $104 million, which is 12% higher than a year before that. And on a per share basis, the earnings rose at a slower pace of 1.5% due to more shares outstanding. Company's balance sheet's very sound. Oh shoot.